This is Bob Kudla. He's the founder and president of Trade Genius Academy. Before that, Bob was an executive for two Fortune 500 companies in the financial services industry for 25 years. He focused on business development and mergers and acquisitions. Bob has been trading since 1991. And in 2008, Bob started his first trading service with this private group of friends. He became so popular, he decided to take it public and turn it into a business, entered Trade Genius in 2015. Bob's strength is that he's able to see around the corners and position his trades into the right markets and sectors. For the past 5 years, he's been able to track a 65% overall win record in the market. Very impressive, and welcome back, Bob.
Hey, thanks for having me.
Excellent, excellent. Why don't we get into some recent news here? The CPI numbers just came out. What are your thoughts about that as far as consumers and the cost of living, and the CPI, which is the inflation that people really care about?
Yeah, I'm with you on that as well. As inflation is really not an important number to me. It's really your ability to pay for the things that you need to. So I always look at the delta between income and cost of living. And just because the CPI rate's at 4%, it's still 4% higher than it was a year before. And if your income's not keeping up with it, you're falling behind. And we're behind. So, and right now also, the reason why it's falling is we're starting to get layoffs in the system. Job openings have collapsed across the board, from small businesses all the way to large businesses. So we're actually going to go from worrying about inflation to worrying about deflation here pretty quickly.
Exactly. And that's a good transition, because I wanted to get into that. Last time we talked a little bit about the credit crunch. We're still seeing a lot of the small and regional banks being a lot tighter on their lending. And what I was trying to figure out is, are the mega banks, the too big to fails, are they going to come in and take over and be more loose in their lending because they have that guaranteed backstop, and therefore you're still going to have people borrowing money, even money they shouldn't be borrowing, subprime and all that? Or is there going to be a tightening across the board, which is going to make that deflation more likely?
Yeah, the bigger banks have tighter credit standards than the regional banks, and primarily is because, if you and I are friends and I said, "Hey, Jeremiah, can you lend me some money? I'll pay you back. My collateral's okay. But you know me for 20 years, and every time that I needed a favor from you, I always came through. You're likely to go ahead and give me the loan." So these big banks don't know you from Adam, and so they'll probably say, you missed our criteria. We're not lending you the money. So you're going to get tightening credit just from that alone. And number two is that people have no collateral and their credit ratings are falling personally. And plus people are scared. So loan demand's falling and credit is contracting. So it's just going to get worse.
Absolutely. Okay. Now, the commercial real estate lending has really dropped off. I've got a recent article here, and it talks about how commercial real estate lending has dropped off by about, 56% just in the last quarter. And we see a lot of vacant commercial buildings. And one of my viewers recently joked, they said, okay, well, now we've got a place to put all these homeless people and get all these homeless tents, packed up and moved into these buildings. And at first I kind of laughed, but then I was like, it's not a bad idea. What are they going to do with all these vacant buildings? Are they going to just sit empty?
Yeah, a lot of them are, because you can't easily transfer them into residential properties. Now, the ones that they can, they will. But for the most part, most of these are what they call abandoned assets. They're literally going to sit empty for, I think for decades, because the problem we have is demographic. And number two is a lot of these commercial real estate are in inner cities or in metro areas, and people are bailing out of the metro areas. So they're not going to come back anytime soon unless the prices get ridiculously low, which is going to happen. We're going to see a 30% drop in rents and in value of these CREs. And this is a couple decade long problem. So yeah, they'll do some of that, but you're talking about really expensive class A space that you're going to put low income housing in. I don't think it's going to happen. They can't afford it.
Gotcha. Yeah. So it's something to keep an eye on. So if there's an area of deflation, that's one area to really look at as far as it's happening now.
So this happened before. So my brother-in-law's father had a big law firm. He's since passed, but in 1991 we had a big crisis with commercial real estate here in California, and he was able to pick up Class A space downtown LA that he got on like 30 cents on the dollar for rent. And he locked it in for like 20 years. That's what's going to happen. Commercial real estate is going to be a dead investment for probably the rest of our lives.
Gotcha. Now, will that help possibly bring back some smaller businesses? A lot of these businesses got wiped out in 2020, 2021, especially the small businesses. Is that going to maybe give them an easier entry back into the small business operational?
It's really sticky. It's going to take a long time. These properties have to go into foreclosure, and the new buyers have to take them before they're going to offer lower rent. So you're talking 2-3 years before we'll start seeing some of these price declines.
Wow, very slow moving. Okay. Well, let's transition a little bit into us as individuals, investors. A lot of people are moving their money, of course, out of the smaller banks, regional banks, into money markets. And sometimes they're getting maybe a 4% return on their money per year, APY. But trading, that's always something too that people should look at. How small or how big of a savings set aside would you recommend to start actually trading?
I think before people should invest, they should have at least 3 to 6 months of living expenses put away. I know it sounds hard for people, but you have no business trying to trade for glory here if you're going to lose your job and you don't have any money. I think that's a big mistake people make when they trade. They get desperate and then they try to trade and they make mistakes because they get too aggressive. When you're too aggressive, you lose money when you trade. So let's assume that you have it. If you have $10, $15, $20,000, there's a way in which you could trade to earn income. I shot you an attaboy over. If you want to post it, you can show people. There's a thing that we teach people how to do called credit spreads, where you're collecting income from the trades. And then we have algorithms that tell us whether or not the price of the stock is too high, too fast, or it got down too low, too fast. And we fade those trades. And you can pick up income. And we average about an 80% win rate on that. The attaboy I showed you is a customer has been with us for 4 months. He's taken 80 trades with us, 94% win rate.
Wow.
So the algorithms work. And if you're disciplined like he is, you're going to make money. Now, he has a really high win rate because he doesn't take a loss, but he has a 58% return on investment. So not too shabby.
Yeah, amazing.
So you can make money even with a small account. And I tell people all the time, you make $100 a day in the market, you're making $20,000 a year. If you're making $200, you're making $40,000 a year. You make $250, you're making the average income of an American. Those things are doable with small accounts if you follow a system and you're disciplined and you do it every day. It is another job, so people forget that. They think, oh, I'll just spray and pray some trades. But if you follow a system, and we have a system, and you do it every day, you're going to make money. And you can't help but make money because we know the algorithms work.
Excellent. Okay, that's good news, especially my viewers. One of the common themes is, what do we do with our money? I give out this news and they're saying, yeah, we hear the news, but how do we invest? So that's one thing. Now let's transition a little bit into precious metals, because I've always encouraged people to diversify, one as insurance, basically, because you have silver and gold. It's not ever going to be completely worthless like fiat paper. But on the other hand, there's people getting into it as a bet that it's going to skyrocket. And we see, predictions out there. I'm sure you've seen them as well. $500 silver, $1,000 silver. And, we've got de-dollarization happening. And I've heard your views on those things. And I've heard you be a little more bullish on the dollar than maybe some other people. Can you explain that as it correlates to precious metals?
Yeah. So, we don't believe in the dollar collapsing. That's people get confused. Remember, we're the one-eyed king in the land of the blind. So as it pertains to other currencies, the dollar is going to be number one. Nobody's going to touch us next 20, 30, 40, 50 years. It's not going to happen. But what is happening is what I call de-fiatization. Is what is that dollar buying you, for your lifestyle? And that's where precious metals comes in. People don't realize that gold and silver move with the dollar 25% of the time. And especially when you get into these stress situations like we're in today, you can see dollar up and you can see gold up. And so, so people get confused. And I think part of it too, people are so interested in, they want to kind of punish America with the dollar going down. You know, you don't think that way. You're in the business of making money. And just because the dollar goes up doesn't mean gold can go up. Gold has had a great run this year. Silver has had a great run this year. And so dollar up, gold up, silver up, not a problem at all. It's just that when you realize if the dollar is going up, you can buy more gold with that dollar. And that's why the dollar sometimes falls against the, gold falls against the dollar and stuff like that. But look, I'm all of the above. I'm gold, I'm silver, but I all buy the miners. I don't buy the, I don't stack, because at the end of the day, how am I going to transfer my stack into food? It's a problem. So I buy the miners where I can convert it into fiat, and then I convert it back into miners and trade those. So that's how we do it.
Excellent. Excellent. Now, on that topic still, on stacking, there are people out there saying that you're going to need something to barter with, that we're going to have this credit freeze up, or even what's called an economic collapse, and the whole system is going to go down. And to me, I think that's more of a black swan event type of thing, where maybe a nuke strikes somewhere, something crazy happens. What do you think the odds are of that happening? And what would you say to those people that are kind of prepping in the prepper world?
Yeah, I mean, look, it's always good to have a percentage, a small percentage in those things, but we live in a 2 sigma world. We don't live in a 6 sigma world. And preppers are, what 6 sigma means is once in 100,000, instant event. I came from the software industry, so we worked on those tolerances. You understand insurance pretty well. What's the likelihood, right? So you have to live in the land of what's probable and not what's possible. And what's probable is that we're going to get continued inflation. What's possible, yeah, could we have a currency collapse? But I guarantee if we get to that level, things will be pretty chaotic, and you may or may not be able to keep your stack, all right? Because if somebody finds out you have a lot of gold, they may just come and take it from you. So I live in the world of probable. And if you trade options with or you buy and sell gold and silver miners, you're going to stay ahead of the curve. And that's what you have to look. That's what you have to look out for. Look, I'm not against stacking. I'm prepped for food. I'm prepped for gold. I'm prepped for silver. I'm prepped for lead. But at the same time is that's not my end all be all. You have to have fungible money to be able to transact. And so you'll start seeing gold back ETFs, and you already have, like Sprott has that. He has gold back uranium. So people will use those, and there's vaults being showed up. I have a friend that owns a vault up in Wyoming where you can put your stack in there, and then you can actually trade against it, or you can get fiat from it. So there's going to be a lot of options coming up down the line as that gets become more important in the future.
Excellent. Yeah, it's a topic that comes up quite a lot with my viewers. And a lot of my viewers are telling me, get out of California. Are you crazy? Get out of California. Obviously, you're still here. We are seeing a pretty big exodus, though, to some of the lower cost states, especially like Arizona, Texas, and Florida, which are not really low cost anymore because so many people went there. But the people that are staying here in California, we're starting to see some interesting things happen. Like one of the things I read recently was the drop off in electric vehicle sales. And now Elon Musk is out there cutting the price of his electric vehicles, and people I think are seeing that electric vehicles are not the savior that they once thought. What are your views on that?
Yeah, I totally agree with you. In fact, we looked around, different places. I've been here 30 years, and I came from the East Coast. So there's no panacea anywhere you want to live, and it's not cheaper anymore anywhere else. Texas is expensive. Arizona is getting expensive. I was just on the East Coast. It's pretty expensive, but we get nice weather here. So I'll pay the sunshine tax. I'll deal with it. And the thing with EV also, look, if you own your home, EV is okay. But if you don't own your home, where are you going to charge it? Number one. Yes. And number two is people that own an EV, 60% of them won't buy another one. So what do they know that we don't know? Right. So, and, Toyota's making a bet towards hydrogen, not just electric. So, the future's not certain yet. on this stuff, and charging's a big issue for people. People aren't going. I go to Costco, I'm in and out of there in 10 minutes. You go to an EV station, you could be there for 2 hours depending on how full it is, or even find one. I mean, the closest one to my house is like 7 miles away, and I live in EV land.
Yeah.
So if you have an apartment, where are you going to charge your car? I just think it's going to be another thing that's going to blow up.
Okay. Yeah. It seems like a big hassle as far as the charging, and it's also dependent on the grid. And as you know, in California, we get warnings here pretty much every summer about the grid. So I think that's is it another nail in the coffin maybe for the electric vehicle movement?
Yeah. So I owned a solar energy company for 14 years, and you can unbalance the grid if you have too much solar in an area. In fact, they won't even put solar panels on certain areas because they have to balance the grid out. And we're lucky here in California because either it's sunny or it's cloudy. But places like Hawaii, where it can be sunny and cloudy in an hour, is that they've really had some problems because you either get a surge of electric generation, or you have a surge of electric need, and it really screws things up. So, yeah, they haven't figured this all out yet. It's a problem. And so, yeah, no panacea. We know that, and it's going to blow up on them.
Absolutely. Okay. Let's transition a little bit more now into trading and what you can offer on your platform. I know you got into some things earlier, but for people maybe just getting started into trading, they see the inflation, they know they need to try to outpace inflation, hopefully, with investing. And what are the next steps that someone should take as far as looking into investing, maybe with you or just in general?
Yeah. So what we've done at Trade Genius is we've created a couple very effective algorithms. It looks at momentum, it looks at levels, it looks at seasonals, and then we've created an environment where we actually give out trades every day. We also teach you how to use these algorithms so that you could, trade on your own. And then we also have chat rooms where we can communicate with each other back and forth every day. And with that package is you could trade stocks with us, you could trade cryptos, you could trade, I was talking about the credit spread, you could trade options with us or futures. And so we created 7 bundles along that, those parameters there. So you could pick and choose what you want to trade. It doesn't matter to us if you're new or if you're an advanced trader. You can, the systems work either way. And then what we've done is we put big specials on for you guys, 65% off. Anything that's already pre-bundled is pre-discounted. Or you can use promo code MOTHER and you can pick and choose anything in the store. You can just buy an indicator, or you could buy a service package, you can buy training, and you get 40% off using promo code MOTHER, and that's gross to net from the retail price. So when you join us, very next day, you can actually start trading with us. And you don't need a big account to get started either.
Okay. Yeah, we're going to have the links down in the description and in the pinned comment as well. Is there a hot sector right now, or is it pretty much day to day you're seeing what's moving or what's an opportunity?
Yeah, energy was hot, but now everything's starting to subside a little bit. So I think we're going to actually go into a bit of a sell-off for the next 2 months. But the market's been really quiet. We've been in a trading range for the last 10 weeks. And that's why those credit spreads we're talking about are working so well, because the market's not trending right now. So going into the summer, we think as soon as Janet Yellen starts getting her debt deal done, then you're going to see a sell-off in the markets, and then from there, going into the fall, we're going to sell off again even harder. So probably the trades are going to be in long bonds, believe it or not, and we can show people how to trade that, and also short tech, and we can show people how to trade that as well. So we think nothing's really hot, but there's going to be some things that are going to be really cold, and we'll trade those.
Yeah, it sounds like you've got a lot of different opportunities out there, a lot of different options in any type of market.
Yeah, we don't care. We don't care if the market goes up or goes down. There's always a trade out there.
Gotcha. Now, you mentioned the debt ceiling. Now, a couple of years ago, maybe 2020, we saw a shutdown. It was very short period of time, temporary, while negotiations were happening. We have talks now that there may not be a deal. as of June 1st. I think that was kind of the cutoff date that I read. So there could be that shutdown. And I remember last time we even had some federal employees putting out, trying to get money off of GoFundMe and stuff like that after only a couple of weeks. I'm like, wow, and we've seen articles that even people making 100,000 plus, a lot of them are living paycheck to paycheck. In your opinion, what's the likelihood of a shutdown, even if it's partial, and how would that affect things?
Yeah, there won't be well, there'll probably be a shutdown of some sort. I agree with you there. There won't be a default because, the government's taking in money every day. So they have operating cash. So they go with what's called a priority. There's a protocol where, you're going to fund certain things and you're not going to fund other things. So there's going to probably be furloughs again on federal employees. And there's going to be, they're going to shut the parks down again. They're going to do that kind of stuff to punish the people. Yeah. And it's going to be another, probably could be, 4 to 6 weeks of this. So I think it'll cause some chaos, some scaring. But all the social programs are going to get funded. The Department of Defense will get funded. They'll do what's called stop back measures and stuff like that. But they won't fully fund the government until they get this done. But this could drag on all summer. People have dug in their heels there pretty hard, and the Republicans are not going to give in, I don't think.
Yeah, I like your analysis on that. We talked about trading. We're going to have links down there. Is there anything else you'd like to add to our conversation today regarding trading or anything else with the economy?
Yeah, I mean, the only thing I would say, in conclusion, we're going to go into a little bit of a seasonally weak period, into early summer. We'll probably get a little bit of a summer bounce or a summer calmness, and then we're going to go into a fall sell-off. It looks like that cake is baked.
Excellent. All right. Well, there's opportunity everywhere and at any time. So you made that clear. So we're going to have the links for people, and it's really great to have you on here because my viewers are always asking, what do we do with our money? How do we invest? And it sounds like a very good opportunity for a lot of people right now.
Yeah, it's time for caution. And thanks for having me. I look forward to talking to you again.
We hope we have you again, Bob. Have a good one. Take care.